U.S. Treasuries took down.
Welcome back, Rebels. Rebel Leader here, and today we're going to talk about the best stock to buy for December 2021. Now, what we're seeing in the market currently is a bunch of what they call falling knife stocks. You have big names everywhere from like the big tech companies like Alibaba to small caps and very small companies like startups that are across all different sectors, just falling very hard and fast from their recent highs, right? And when the recent highs could have been 3 months ago, could have been 1 year ago. We're seeing a lot of stocks hit their 52-week low, and a lot of times for no really good reason. And it's important to know that when the fundamentals of a company don't change, and the earnings report and the management of the company and the vision don't actually change, but the stock price is falling, it's a good time to kind of look at why, and if there really is no reason, it's a good price point to actually enter these stocks. And that's why they're called falling knife stocks, because you can catch them. And if you catch them at the right point, you can actually make a lot of money on the way up. If you catch a knife too soon, you can catch it on the blade, and then it'll just keep going down, right? Even after you buy in. So things like these, from any long-term outlook, it's probably a good bet. But again, it depends if you really believe in the company, and that's kind of more should drive it, more so than like a swing trade. For this stock in particular we're going to talk about, and a lot of these falling knife stock in the current climate of the market, I would say that it's a good idea to put some money in these stocks to see the turnaround happen. And I feel like as soon as next year, as soon as we get out into the spring, where it's gonna be a rough winter, you have more COVID variants coming in, and a lot of people tend to, go back inside. You have some tax loss harvesting happen at the end of the year, people buying more stocks, and the new year starting fresh, inventing their portfolio. What we're gonna see is a lot of these stocks are gonna go up, and they're gonna go in the short term very fast. So that's why it's kind of a good play, especially at the end of the year, to kind of pick up on really any dip. But these end of the year dips, they happen literally every year, and sometimes these falling knife stocks can pay out very well in the short term. We're talking 3 to 5x. I mentioned Alibaba, Lemonade, PayPal. These big tech companies are great, but also just been falling recently. The stock today for the best stock to buy for December 2021 is actually a much smaller company. It's Smile Direct Club, ticker symbol SDC. This stock IPO'd just over a year ago, I believe 2019, and it IPO'd at $20 a share. Initially, it started dropping over the course of a few months, and recently it's just been dropping even more and more. I believe this past summer it was at $10, and now today it's hovering around $3 a share. And this is, again, a great buying point because the brand and the company vision hasn't actually changed ever since it launched. The plan was that they're losing money right now to expand the business. And losing the money, mostly marketing costs to try to get their name and to build up their brand reputation. Now where this becomes catch-22 is that the exact marketing costs that they put in directly tied to the amount of sales that they make. So versus something like Invisalign, their main competitor, which is actually in a dentist office. So Smile Direct Club, it's an independent, again, small startup company, and they are one of the 2 big players in the teeth straightening business. And really, you just take some scans of your mouth, and then they make these, I guess, retainers that you can kind of put in, while you go to sleep or every day for the course of a year, and then you get dental checkups. And then just to make sure that your teeth are lining, they'll send you new packets and actually new retainers every few months to make sure that you're making progress on your teeth straight. It's a very simple model, Smile Direct Club. And it's a very easy to understand business model and concept, right? But where it gets tricky is that now with the COVID recently, nobody's expecting the first thing to go in anybody's budget when times are tough and during this COVID scenario, especially when people aren't going out, is going to be most cosmetic things. What we're seeing here is that Smile Direct Clubs has been reporting greater losses more recently because there's not enough buying power or not enough demand for their service. So what we're seeing here every single quarter, as analysts have expected less and less losses, obviously until we get to break even in a few years probably, or a few years out from that, but analysts are expecting to see us getting closer to a break-even point where the company becomes profitable. And it's actually going the opposite way right now. And these are all the reasons, mainly due to this COVID scenario where, again, people aren't out and spending, they're not even going out and about, so they don't really think they need straight teeth. It's pretty costly, but compared to what you would spend at an orthodontist or a traditional dentist office, or if they have braces, it's much cheaper. but it's maybe like half the price. So, if races are like $5,000, maybe Smile Direct Club is anywhere from $1,000 to $2,000, right? So it's something like that. That's probably not the first thing you're going to spend money on. Smile Direct Club does get great reviews. Pretty much seemingly is going to be the future of giving greater access to people who want, better teeth. So that's kind of years down the line. That was always the vision, expanding the company now. But we're seeing like a falling life stock where this company went from $20 a share at its initial valuation back in 2019 to now $3 a share. And it went from, again, $10 a share like 2 months ago down to $3 a share. This company is basically priced for bankruptcy, but it has so much support. It can keep raising money to keep itself going. It's not gonna go bankrupt because the vision is still intact and people still believe in this company, especially the investors and creators of it. And it is still a good business model. But what it is, its current climate, it might take a year or two to even get back to where we were, where the business was in 2018, where there's hype around it, where people are expanding, where there's office spaces again for this company. I know everybody's kind of like working remote. So there's a lot of things that kind of in a short term negatively impacted this company's business model. The long-term vision is absolutely still there. And at any point, you're gonna look at this, maybe in the next 3 or 5 years, could easily reach back to where it's been. Maybe in a 2-year time period, it can reach $20 a share again. And that's why the risk to reward ratio here is very good, that we're buying a stock that's priced for bankruptcy at $3 a share, but the upside is that can go back up to $20 a share at least. It can almost immediately go back up to $10 a share in the next year. 3x potential in 1 year, or again, a 7x potential in 2 or 3 years again. That's kind of what we're looking for in these falling life stocks. I've seen this before in a company called Funko, which does like pop culture toy collectibles, bobbleheads mostly, but also just like action figures, stuff like that. And this company, they were $20 a share. A lot of things happened that were out of their control. Their company dropped to $3 a share. And then slowly but surely, a year later, it was already back at $20 a share. I think it reached up to $25 a share. So of course, don't put all your money in it. I certainly didn't, but I put a fair amount that I was comfortable kind of throwing in for this swing trade. That was a great falling knife company that, I still believed in. Business model made sense if you look at the numbers for that company. And the business model and the numbers make sense for a company like Smile Direct Club for where it can go in the future, where it's at with its current customer base and acquisitions, right? The main point here is that in any of these companies that you're gonna buy, whether there is like a major dip, it's good to know that as soon as these companies go back to a fair valuation in any play, it's probably time to get out of it. And again, it could be 2 or 3 months from now. It could also be a year from now. If you're gonna buy Smile Direct Club, as soon as it reaches back up to its fair valuation of I believe analysts have it somewhere hovering around anywhere between $8 and $11. It's probably time to pull out of it. With falling knife stocks, they're very volatile. And what we're gonna see is it's gonna go up and down and up and down. In its sole trajectory, it will go generally trending upwards. But you're gonna see this volatility with these falling knife stocks that you kind of wanna get out of. But again, Funko is currently trading at $16 a share right now, after I think like almost 2 years of Funko being at $3. So there's two terms of thought here. In the long term, it could play out, but for Smile Direct Club, if you're gonna put $1,000 in it, I think it's fair to assume that you're gonna hold it for the next few years and kind of see where it lands up. It's probably gonna be at 3,000 or 4,000 at the end of those years. So that's why that stock to buy, it's gonna be Smile Direct Club. I think it's kind of one of the most intriguing risk to reward ratios currently in the market, and especially out of these falling life stocks, so the more money that you put into it, the upside is kind of just so drastic because it's so low of a price. It's almost priced for bankruptcy basically. And we saw this with Carnival Cruise Lines, which it fell down to about I think $5 a share, and it was trading at $60 a share. It doesn't happen all the time because these companies are so massively undervalued, right? That's the point that we're looking for in any given month. We're looking for companies that are so undervalued that it's kind of a no-brainer. It's almost guaranteed money just on the upside. You have to kind of do the research, kind of make sure you believe in the stock long term if you're going to hold it for long term. But if not, a lot of people kind of just do these swing trades, especially these falling knife companies, that if you just kind of play like the long-term mind game, you're not cutting up your upside. Versus if you kind of play the short term, a lot of times you do cut off your upside. The game is always supposed to be long because that's how you make all your money. It's really not in the short term. It's really over time when that compounds. So that's going to be the best stock to buy for December. There's going to be a lot of good sales right now. You can kind of pick up really any of these stocks. It doesn't matter. So you should be picking up stocks every single month. Again, that was the entire plan here. And I gave you some options in this video, but falling knife stocks are kind of all the rage right now. I'll see you next year. Rebel Leader, over and out.